very much for the introduction, and good morning, good afternoon and good evening to everybody from a sunny South Africa. Welcome to our panel discussion today on Fintech and the future of banking. I'm very honoured to moderate the panel today and having such expert of panel members. I'm not planning on doing a detailed introduction of each, their bios were provided, but I'll just mention briefly who they are. On the panel today, I've got Jerome Frey, he's the Chief Information Officer at Discovery Bank. Michelle van Staden, Executive Digital Fast Lane at Nedbank. Naomi Snyman, Emerging Technology and Innovation Lead at Standard Group. And last but not least, Tauriq Keraan, Chief Executive Officer at TymeBank. And thank you very much for the panel members for joining me today. If I may start with you, Tauriq. Financial inclusion in South Africa is a big challenge, and I know your bank, TymeBank, is looking to address the needs of the and underbanked. I would like to understand how you as a bank reach out to your target market and what is your value proposition?
Yeah, thanks, Suzette. It's a very good question and one I get often. So I think the first thing to point out is that one of the differentiating attributes of our business model is the fact that we are a digital bank, but we also make use of physical touch extensively, right? So whilst we don't own branches, right, we partner with other organizations such as grocery stores that are than we are. Now, why is this important? It's important, well, you get all the scalability and accessibility benefits of being digital, but you also get the trust that comes with being able to look customers in the eye. And we have found that through kiosk technology that we've deployed into our partners' grocery stores, this is Pick n Pay and Boxer, they one of the biggest retailers in South Africa, where a customer walks up to these kiosks and onboards within 5 minutes, gets a transactional bank account, a savings banking account, and a personalized debit card with their name printed on it. And then immediately afterwards, being able to deposit money and withdraw money at the till point is massively important. So the closest model to this is probably that I'm very familiar with is Compte Nickel in France. And they have partnered with thousands of tobacconists across the country to bring about that same experience. So that brings better accessibility. I think that's the first point. The second point is that we have a massive focus on providing customers with significant value. So the fact that we are incredibly low cost on transactional banking, the fact that we pay the best rate on savings, certainly for a product that's immediately available to its customers. If you move your salary to us, you get your salary the day before the time, which is massively important for consumers that are under pressure. All bodes well for the consumer, particularly during a incredibly difficult economic time like we're currently going through. So there's a massive focus on value. So the question then becomes, how do you get that value that you pass on to the customers? And that's a combination of us being digital at the core, which means we have all the automation benefits, we have all the data benefits. By way of example, we run the entire bank, which is now a scale bank of over 2.5 million customers on the platform with about 200 employees. Compare that to thousands of employees at the old bank. So that's the first thing. The second place we derive significant value is through this outbound partnership led distribution model, which means we don't have to go brick by brick to build this reach to our customers.
Thank you, Tauriq. Thank you very much. Naomi, if I can move over to you, and you being employed in the largest bank in South Africa, just wondering how Standard Bank approach fintech firms, considering that as Standard Bank you might have the scale but maybe not the agility in meeting customers' needs. So I was wondering how this affects your approach to innovation and digitization, particularly Do you focus on buying or partnering with fintech innovators?
Hi, thank you. So I think that the first differentiation that we make is we see fintech firms not only as suppliers or vendors, but also as partners. And that's really in line with a big business model change that we don't only see within traditional banks, retail banks, but also in other sectors where big corporates are moving more towards a platform-based or an ecosystem-based business model. So within that context, what really hasn't worked out for retail banks in general is we are so used to doing things by ourselves. We either build it ourselves or we buy somebody out. We've never really thought about how do we create value with partners, being these fintech firms, together. We've never really thought about how do we shift this balance of power, because it is very unequal at the moment. And I know if there are any fintech firms in the audience, they will cheer me on to say that the balance of power is incredibly skewed. We also treat fintech and fintech partners very inconsistently. So within that, as a context of us trying to reimagine the future with partners as opposed to delivering new solutions to our clients through a vendor or supplier relationship, that means that we need to do a couple of things. We need to change not only our mindset, and if 2020 hasn't been the biggest mindset change in all our lives, I don't know what you need, but given this massive change that we're going through, we are going to see more and more platform players that the bank will launch within very specific ecosystems, whether those are sectoral, being agriculture or within the trade space, or whether that's a capability that actually stretches across the horizontal. So those are some of the things that we think about when we think fintech. I think also the other thing that we quite often forget is that banks make it so hard to do business with, really, really hard. Not only from a procurement point of view or from a legal point of view, and most of our fintech firms don't have extensive HR structures or legal structures to look through from a contractual point of view. So those are the types of things that we really want to focus on to make easier to be a friendlier partner. And I think also when it comes to a buying decision when it comes to a buying decision or a partnering decision, we've also figured out that if you do buy into or make an equity investment in a fintech firm, you really stifle their creativity. You almost kill and crush their spirit because you want to, in a standard bank sense, paint them blue. So our focus is going to be more in terms of partnering, co-creating value, and then I think splitting the risk a little bit more equally, and I think shifting this balance of power is one of the biggest things that not only Standard Bank, but I think banks in general need to rethink. Also, when it comes to fintech partners, just in closing, Tauriq made this fantastic comment in terms of how they've partnered with retailers. But we're also living in a space where industry lines are becoming so blurred. And I think that should also lead us into thinking about partners or fintech partners in other sectors that could create new value for customers as we look into expanding into new ecosystems and new markets. Thanks.
Thank you very much, Naomi. Michelle, can I ask you, what has your experience been with COVID-19 at Nedbank, and has it resulted in a meaningful move to digital financial services? And maybe you can give us some examples in your response.
No, certainly. And I think by now we've all seen that meme which attributes the acceleration of digital transformation more to organizations needing to adapt in the wake of COVID-19's distance economy than the actions of CEOs, CIOs, or CDOs in an organization. So, of course, yes, it has resulted in a very profound impact within our organization. I think reflecting on this, first, within the resilience phase of the crisis, our focus was on managing transactional liquidity, the safety of depositors' funds, but importantly too, ensuring that we could receive and adequately assess applications for payment holidays and further loans at scale in a digital format within a very short amount of time. I think it's also known that we have, as an incumbent bank, huge workforces deployed in the physical domain of branches, physical transportation of cash. And like many of my colleagues on the panel, we experienced significant increases in the mix of digital in the origination, in the transaction space, and also within the servicing domain of our business. So absolutely a profound impact across the board, I would say. For me, the most significant example, I think, was a cultural one. And it was amazing to observe from our home offices and sometimes in our slippers, even the most traditional grey-shoed bankers learned very quickly how to use collaboration software so that we could continue to be there for our clients and live out our purpose. And I think that's just testimony to what it means to have human resilience. And when our sense of purpose is adequately invoked, we find a way to see things differently, to adapt and to execute accordingly. So it was a great learning experience, I think, for all of us.
Thank you. Thank you very much for that, Michelle. Jerome, can I ask, with Discovery also being one of the new banks in the South African market, how does Discovery view customer data? And how do you use it to best serve your customers in a space on distinguishing yourself from your competitors?
Yeah, it's a very good question because, we in South Africa, you've got a range of banks, as most countries have. We found ourselves obviously being another bank, and we had to differentiate ourselves. And one of the way we do that, just for a little bit of background, Discovery is a large insurance group, not South Africa, but worldwide, with tens of millions of customers. So I guess we may have an advantage over some other newcomers, and that is one where the group has an immense amount of data. The other core value behind the Discovery group as a whole is this shared value model, and that goes to the core of our proposition. We call ourselves a behavioral bank, and what we aim to do is we aim to make our clients wealthier and manage their money better. And clearly, in order to do that, data is at the core. We need to have access to real-time data in split seconds, because what we will do is we will provide and differentiate, as an example, our deposit rates and our investment rates depending on the client's behavior. We will, and that is a Discovery value, we will provide incentives back to the customers. I mean, in the health business, the parallel is easy to understand. If you claim less to an insurer, there's more money left over at the end of the day, which means that the organization becomes more profitable, and it can then afford to give some of that value back to its customers through certain rewards, discounts on airlines, cheaper food at shops, and those type of things. In the banking scenario, we wanted to do exactly the same thing. So we built a bank at the back of that. We're saying if a customer behaves better, it means that we will basically have less bad debts, a concept that everybody would understand. If a person pays on time, that's worth something. And that means that we can then afford to pass that benefit back to you in terms of better interest rates or more rewards. And what the bank is doing is it's looking at the status of a customer across the entire group. So your behavior on your health, the way you drive in your car, and the way you behave in your finances all comes together through a status that we give you. And your status will start as a blue and will go all the way to black or gold or platinum, as we would understand in the airline industry. And the higher your status, the higher your rewards. But doesn't mean that once you get to the top, you can't get back down, but you do need to manage your behavior on an ongoing basis. So clearly, data is at the core of our business, and we need to have instant access to quality data and accurate data. Obviously, the bank doesn't have access, because of privacy laws, to the entire ecosystem, basically. So there are, if we want to have access to data which does not belong to the bank, we need to get the client's consent. May we have access to some of your data in the rest of the group. And if that content is no, then obviously we are more limited in terms of what we can offer those customers. So it's a very difficult equation to actually keep in balance, but it's proved to be very successful because after about 15 or 16 months of being in business, we already have 500,000 accounts. And we're finding that our customers really enjoy this model, and they want, and if a customer doesn't get the right level of rewards, it's not going to take 1 minute until that customer is on the either on the social media or alternatively in our call center complaining because his discount wasn't powerful enough. So data is at the core of our business.
Thank you. Thanks very much, Jerome. Tauriq, if I can move back to you, being a challenger bank, can you tell us where do you find your talent? Is it generally staff which move from the other banks, or do you need to source your talent in some unique way?
Yeah, I think the first thing to point out is that diversity is absolutely imperative for our business, and I'm not only talking about gender diversity, sort of ethnic diversity in backgrounds, because we are trailblazing new ground. And I want to come back to the point that Naomi made a minute ago, which is you're often trying to solve problems that are on the convergence of industries, right? So by way of example, we have a former farmer who drives our continuous improvement. Our head of engineering came from retail. Two of the people who drive our artificial intelligence agenda come from a background of lecturing. Just my direct team, you probably have just over a third of them which are from old banks, a third who are from new banks, and the other third are a mishmash of some other backgrounds. But I think the real point here is it's what attracts this talent, right? And that comes back to culture, which we can't get into detail today. But I will say that making this a fantastic place to work. When you ask people, they will say is purpose-driven, an organization that is really founded on innovation, and being the first to make your own innovation redundant rather than waiting for your competitors to do that for you. An organization that is a high-growth venture, meaning that the landscape that you thought you understood yesterday looks slightly different this morning. And in order to be successful, you have to have this whole organization and all its partners move in lockstep. Is really important. And I think that sort of fast-paced environment, the fact that we are doing this to bring about societal reform and economic reform in our country, and the fact that we are working at the cutting edge of business model and technology innovation, I hope at least is what attracts people to the business, and I hope is what keeps people in the business.
Thank you, Tauriq. Thank you very much. Naomi, now to you, and still on the question of talent. And so, I mean, you're very involved in looking at fintech innovation. What's your view on fintech talent in South Africa, both in terms of human capital, but also as it relates to these fintech firms? And also, if you can just talk around your view of the innovation ecosystem in South Africa and how that may contribute to financial services now or in the future.
Okay, great, thank you. So my view on talent is extremely positive. If I just think about some of our strong fintech firms, Ozo, that's just landed a billion rand in transactions in November. There's Ukesh, there's Moma Money, there is FinChatbot that's now expanding into the UK, and there's also Aerobotics, which is, I think, phenomenal in terms of what they're doing for agriculture in the US. So it's not that we're sitting with a shortage of talent or shortage of ideas. or even to a certain extent a shortage of funding. If we think about some of our VC firms, some of our big corporates that are also starting to invest in them. I do think that there is a way that within the innovation ecosystem, we should be more focused and more driven in terms of tapping into these skills. What I mean by that is, if we think about from a partnering point of view with the fintech, usually we just think about how do we white label their solution, how do we use their solution to tap into new markets. Never do we really think how do we use them to expand our own skills, to use them as an actual R&D facility. And that's why within the construct of the South African innovation ecosystem, we've partnered with a company called Silicon Cape. And what Silicon Cape does really well is they perform almost this conduit role between, you know, these hordes of fintechs. How do we make them more relevant, and how do we tap into them to, you know, upskill ourselves? Also, what's, you know, really important from an innovation ecosystem point of view is the actual geographic location. So if we think about innovation ecosystems, physical ecosystems, that's done really well. You know, Singapore obviously being, you know, the poster child, but then also Cambridge in Massachusetts, next to, well, between Harvard and MIT. What they've done well is create a space where you've got a wide range of the smartest engineers, the biggest corporates. You know, for example, Johnson & Johnson has set up shop there, Philips is there, Facebook has set up a new space, the American Defense Force has also set up a new sort of office there, in terms of how do you physically work together with the best talent, with the VCs, with the social media from a channel point of view, and then also really how do you figure out, how do you build momentum, or how do you get the network effect in that really small space. So within the context of South Africa, our go-to innovation ecosystem is within the Cape, not because that's where the most of the talent sits. There is a lot of talent in Johannesburg and the surrounds, but within Cape Town itself, from a governmental point of view, a lot of focus and a lot of effort has gone into building up Silicon Cape, or, you know, actually Cape Town as the fintech hub. And this is very evident in Google's latest investment within Cape Town to build a new fiber submarine cable. I think that was to the value of 2.2 billion rand. But then also, as we see other industries also settling into Cape Town, for example, the French dairy producer Lactalis, and then also I think Amdec has made also significant contributions. So when we think about the innovation ecosystem, there must be a strategy. Somebody must lead it, and in most cases, it must be center-led. That's what's worked well within Cambridge. That's what worked well within Singapore from a regulatory point of view. And then I think we need to all step back and really just get over ourselves and try to work, I think, more closely together with regards to sharing talent. And also, just in closing, one of the biggest benefits that we've seen from 2020 with the COVID pandemic is an increased rise in the gig economy, or otherwise known as globally traded services. Now that I can work remotely, you can actually use some of the best talent that we have in South Africa. You can also set up your business in a completely new way to provide services abroad. And I think that's, in essence, what we definitely should see going forward. More private-public partnerships focused on a very specific area. And I think being more aggressive in terms of how we sell our services within the gig economy.
Thank you very much, Naomi, for that. Michelle, if I can move maybe a bit closer to home, one of the interesting innovation trends deals with what's in the platform economy. What is your view on this, and is Nedbank's Avo Super App seeking to address this trend?
Yeah, certainly. So Nedbank's investment into the Avo Super App is absolutely about looking at the power of ecosystem aggregation. So it's an essential part of our digital transformation journey, which really started with the creation of a digital backbone first, digitization of core products and services, data, automation, straight-through processes, all powerful levers. But the dual-sided marketplaces that are enabled with these beautiful client-centric customer experiences are, to our perception, the real unlocks of the future. So I think pulling together the best of breed into one platform is around ensuring that customers and businesses can manage their lives through one app, breaking through the digital clutter on mobile. And looking at it from a client centricity perspective, I think, today's banks have an opportunity on one hand and also a responsibility to do far more for their customers than merely provide financial services. So we see platform ecosystems as the perfect way to deliver this and to have comprehensive value propositions that our clients deserve. I think, we see that we've got the capacity to add massive value to every aspect of a person's life. And the conception of Avo and really thinking around what would make a huge difference in that platform economy and ensuring that buyers and sellers could come together and resolve things like trust by providing escrow was really important for us. It was one of the key pain points that came out of that journey. So it's for us a big step, and certainly the first of many steps that we would like to take in terms of leveraging our leadership in creating and facilitating real and lasting value for our customers whilst we embrace the digital transformation that is afoot.
Thank you very much, Michelle. Jerome, in seeking to dazzle your client, Discovery has said that it will seek to regularly release products. Although Discovery Bank is a new digital bank in the group itself is not new, and you did mention this in your earlier response. So how does the financial services group drive such an objective, which is more generally a characteristic of an agile innovator?
Yeah, very good question, and it's an exhausting concept to actually follow through on. I guess one of the first thing is the concept of dazzling our customer is one of our values. In fact, it's just been the set of values that have been enhanced recently to take the word dazzle and say customer, customer, customer. So basically the customer is among 8 values that we have, and it's absolutely core to our proposition. So I guess you're absolutely right. There are 2 things we have to do on an ongoing basis as a new incumbent, and that's also at the core of Discovery's philosophy, is to launch new products out there in the market on a very regular basis. And these days customers demand new things all the time. You just can't assume that what you offered them 2 years ago is what they're now looking. So you need to be guided by your customers all the time. That's the one thing. You need to be guided by the competition out there, internationally and locally. You need to be guided by social media. Don't underestimate the power of social media. If you put your sensors out there, you'll see very quickly what customers want, what they don't like, and where they're trying to drive your market. You need to do some market research. All of that needs to be brought back into a pot, basically. And then what Discovery does is every 6 months, basically, it sits down and works out what the next batch of new products will be. And some of it is service improvements, small little things which will make a big difference to the customers. But for the most part, it is a matter of thinking totally out of the box and coming up with products and features and functions that nobody else has thought about. And the Discovery Group as a whole has got a whole R&D lab. And all of that R&D lab basically is it focuses 24/7 on trying to think new products, new functions, new features, which may not have been released anywhere in the world. For example, dynamic interest rates. There's deposit rates and lending rates which fluctuate every single month linked to your behavior is something that the industry just hasn't done in the past. And there's no doubt the bank is having to work very closely with the Discovery Group because when it comes to March and September, which are the traditional launch times and release times of new products. We need to be there with an insurance company, with a life company, with a health company, with our set of innovation. And our innovation, together with the rest of innovations in the group, have got to speak to each other. So that's a very powerful force, basically, to force us to actually come up with new functions and features. And the reason why I was saying it's exhausting is we've just sort of set up a bank and we're all pleased with ourselves and it is up and running, but you just can't look over your shoulder. But, you know, often fintechs are lucky because they're not regulated. We are a fully regulated bank. So it's one thing to say we're going to release new products which will, you know, which may sound absolutely wonderful, but if it doesn't match all of the criteria in the various acts that we are managed by, then it will fail the test. So it's a matter of, you know, doing something which will tick the boxes of a regulator, please our customers for the future, and add value to our customers in terms of service. So it's a complex equation to get right, but it will keep us awake.
Thank you, Jerome. So Naomi, can you, who do you think is the firm to watch which may shift the provision of financial services in South Africa?
Let's see. In South Africa, it's a little bit hard because, I mean, from a retail bank point of view, our competition is just so low. I mean, you know, thank goodness Tauriq has been given a banking license to operate, and the same goes with, you know, a couple of other new partners. But our competition is just so stifled. So I would love to see a non-traditional bank or non-traditional player come in, and I actually would like to see it be a partnership between a telco and a retailer, where the banks are all modular producers of, you know, whether that's lending products or sort of our normal transactional products, which will force banks to create new value, which will force us to think differently and to you know, think about our value proposition. Our value proposition is not just to clients. Our value proposition is to partners, why they should partner with us. Our value proposition should be to platform orchestrators. Why should they take one of our modular products onto their platforms? And I think, you know, one of the best things that we've seen from Nedbank is the API gateway or the API platform. They have a proposition to API developers, right? So I think what I would like to see is a non-traditional marriage where banks are just going to be forced to radically transform how and what we see ourselves to be providing value into the market.
Okay, thank you for that. Tauriq, can I ask you what the role of the policymakers and the regulators are enabling responsible innovation for the benefit of the public? So actually, what do you think we as regulators and supervisors should do to support innovation in the market?
Yeah, I actually think, let me speak from a South African point of view. Our regulators have been incredibly supportive of banks producing a better customer experience, right? And I've said this before, I've got a lot of empathy for regulators because primarily their job is to mitigate against a systemic event, right? But they do come under pressure to promote a better customer experience. So it is about promoting that while managing the unintended consequences of the decisions. And, you know, there are a number of instances where we've benefited from regulators being supportive in this space. I'll never forget that one of the probably longest and most difficult conversations in us getting our banking license, which at the time was the first banking license issued in South Africa for probably 16 or 17 years at the time, was hosting our platform, our banking platform, as a fully regulated bank in the cloud. But once we got over that point with the regulator, it then paved the way for other banks subsequent to us, right? Which is ultimately in the best interest of the country and in the best interest of the small business and the consumer. So, we've also benefited from other forms of promotion. So we would not be able to onboard customers the way we do without the know your client construct having moved from a very rules-based system to a risk-based system. It just would not be possible for us to have done that. So I think, my reading of it is that our regulators are tough, but fair. And I think it shows in the resilience of the South African banking system, which has, on more than one occasion, withstood quite severe shocks.
Thank you, Tauriq. Maybe we should pause here to see if there's any questions from the audience. Sipu, can I hand back to you now for any questions? Oh, Sipu seems not there, so maybe I can ask another question. Michelle, Naomi touched on Nedbank's API marketplace. Could you perhaps talk around this and describe to us what it's about and what has been the learnings from that, and how do we create an inclusive open API ecosystem in South Africa?
Yeah, absolutely. And, thanks for that acknowledgement. Our value proposition, as Naomi pointed out, to partners and developers is about creating the opportunities to disrupt the traditional approach to banking and financial services. And we see this as laying the groundwork for a truly client-centered, market-orientated, and innovation-driven future. So, allowing our partners to be able to leverage the bank's data and financial capabilities was what this was all about, and having to underpin it with the philosophy of placing our clients' data back in their hands and empowering them to decide who to share their data with was what opened the door to third parties to partner with us and provide digital solutions that have not yet been seen in the market and really just give innovation super juice. I think let us not be have too much hubris around this, because turning to the challenges of this, I think the commercial model for the use of the bank's capabilities still needs refinement. And the principal question is first to ensure financial stability within the global financial system. So, our view of this is no individual or society has ever been better off when financial institutions fail. But at the same time, financial institutions which abuse monopolistic power over an ecosystem have an equally devastating effect. So I strongly support Naomi's view. Thank goodness Tauriq and friends were granted their banking license. It's good for all of us. In a developing economy like South Africa, the notion of financial inclusion, abuse of vulnerable people, I think, and low levels of financial literacy add further complexity to this. So the introduction of more challenger banks is one that is welcomed. And for us, the move to open banking is around disrupting ourselves and having the courage of conviction that client-centered disruption is necessary. So for us, embracing this, the innovation, the technology, the business models, in the most responsible way, we spent some time observing the trends of open banking and PSD2 in the wave of, what happened in Europe and in the UK. And I think, that was about directing banks to relinquish their monopoly power. But for us, it's about actually saying that innovation is a rising tide, and it's our duty to cut the ropes and chains which might prevent us from thriving in a disruptive future. So this is because we believe that our roots are really around being financial experts, who do good. So adapting and experimenting with this in the most responsible way is really what has inspired our foray into this world. It hasn't been without its challenges, and I think as I had said, the commercial models around this, and maybe touching, I think, on what Naomi has so eloquently positioned, is that balance of power and ensuring that it is one that honors both the need for financial stability and the systemic risk of not having large financial institutions being stable, but at the same time ensuring that we embrace the challenges of innovation is the balance and the challenge of our age. But I think it's what makes life exciting at this juncture, and certainly as a bank, we are learning a lot through the process.
Thank you very much, Michelle. Jerome, this question is for you. So we've seen a number of customers joining some of the new digital banks, being it your bank or Tauriq's bank. Is this just opening new accounts or to explore new offerings? And is it okay with yourselves? And then what do you think needs to be done to get people to actually move their primary bank account to these new digital banks?
Yeah, it's a very good question because it certainly puts us, the new incumbents, it puts us at a disadvantage because we all know that, opening a new bank, it's not good enough to just have an account. You want an account which transacts because in banking, at the end of the day, you make money if money moves. So it's important to get the transaction flow. So it is really hard, you're absolutely correct, to actually get customers to move. So that, I guess, you'll tackle that problem in two ways. On the one hand is, your hope is youngsters. So if you look at the Discovery Group, we insure the parents and we insure the parents' kids. The hope, obviously, is to get hold of the kids, and the kids will start banking with you as a matter of course, basically, because they've been associated with a Discovery brand in the past, and they like the model. So that's certainly one. The second thing comes back to customer service. Youngsters these days, as you know, millennials don't want to go into a branch or anything like this. So for them, a branch like ourselves, which is mobile only, fits them to the T. So that obviously will make life easier. When the youngsters, it will just become second nature to us. So initially the parents will give them a secondary credit card, and then eventually we'll convert that secondary credit card into a primary account, which will become a new relationship. So I think getting the youngsters on board and bringing them with good customer service is absolutely essential. As far as people like ourselves who've been in banking for 50 years, I mean, I used to bank with Nedbank and Standard Bank for that matter. So those were my two brands of reference. It is absolutely hard. You need to offer something different for people to actually swing, and don't think that they'll just swing overnight and transfer all the business to you. You genuinely need to have a different value proposition, and that value proposition is going to be powerful. So that's where we're always thinking about what other products can we try and deliver that the rest of the industry hasn't delivered, and that's hard to do.
Brilliant. Thank you. I do have some questions actually from the listeners. And the thing that they're asking is actually in two parts. One is around I guess the feasibility of actually trying to scale, particularly I mean for you, Tauriq, really thinking about how do I actually do it rapidly, given the volume that you I guess would need to reach to really get to mass, right? And then the second one is linked to a conversation you had before, which is around there's a belief that most of South Africa is banked, and I hear you talking about the youth now, but I guess that question is, so where is the opportunity? Are we really going to be, I guess, banking the already banked, or do you see that opportunity where there maybe is quite a significant group of people that are unbanked, and who are they, and why would they make sense to be an opportunity? Thank you.
Thanks for the question. I'll take them in reverse order, perhaps. So you are right. 12 years ago, when I was around the game of digital banking, when it was still unpopular in South Africa, our unbanked population was a lot bigger, but that has decreased significantly, largely because of how we handled the distribution of social grants in our country For those who are not familiar with our country, South Africa is one of the biggest social grants systems in the world. And as a consequence of that, many people got bank accounts, but were underutilizing them. In fact, are still underutilizing them. Now, whilst most of the country is banked now, in our estimation, we still believe that there are 20 million, call it, consumer customers that are still underserviced, and about 2 million small businesses that are also underserviced. And I think that's a significant opportunity for any challenger bank. So that's the first point I wanted to make. With regards to the first question, which was around scale, so I can only speak for our bank. We've been in market for just longer than 18 months, and we've got over 2.5 million customers on our platform. That makes us, by all accounts, one of the faster growing digital banks, I would argue, globally. So now, what makes that possible? Well, it's the distribution I spoke about, but it's also what I call integrity of operating leverage. So what does that mean? This means that it's not like the olden days when a bank used to go about building branch by branch and making sure each branch is profitable, right? This is setting up, our business is set up for scale from the beginning. And what happens is, as you grow the business rapidly, because of the integrity of your technology, your data stack, your operational processes, you actually don't grow the cost base in tandem. So we don't see scale based on historical performance and looking forward as a challenge. In fact, our business model, particularly the distribution and all the sort of technology bits that go with it, is quite easily replicable into different partner environments as well. So you can photostat copy this thing quite easily.
Brilliant, brilliant. Thank you for those responses, and also thank you for the answer to the question. That was basically the bulk of the questions that came through. So I'll also use this opportunity just to really thank all of you, and also to thank you, Suzette, for moderating the panel. I believe everyone who was listening really, really benefited from it, and thank you so much for giving your time. Very much appreciated. Thank you.